Welcome to our webinar. My name is Tigist Dabasai Gulbat. I am your host today, and we are here to speak with you in regards to education and beyond. And it's exactly 11 o'clock. We wanted to start on time so that we can let you go on time as well. So a little bit about myself. Like I mentioned, my name is Tigist. I'm with eWave Financial Services. And who is eWave? We are a financial services company for over a decade of experience, and every day we go out and help families plan for their future, plan for their family. And today, that's one of the sessions. Fortunately, we get to talk to you today online, but previously we used to do this, 2-3 times a week on a weekly basis live. And I tell you, it's more fun to do it face to face. But now that we know COVID is here, we have to do virtually, and I'm excited that we actually could reach more people this way, and you could get to join us and learn from our experts here from the comfort of your home. And thank you for coming out and wanting to spend your hour on a Saturday morning with us. So at eWave, our vision is we're leading the financial literacy revolution by redefining the creation and preservation of wealth. And that's a part of it is what we do today. And our mission is to teach financial literacy and provide solutions for our clients and associates to enable them to build and protect wealth. Our services we have different kinds of services from risk management to estate planning to asset allocation, retirement planning, and so on. So without further ado, I like to invite our speaker, the first speaker. We actually have two people that we the opportunity to present to you, and one of them is Paulina Ferrer. I will share this, and then she will come and talk to you. You can type on the Q&A that you could hear me. You can type number one, so I get to see that you are listening to me and it's clear and you could watch. Everything's good. Our first speaker is Paulina. She's one of the most energetic person that works with us here at eWave Financial, and she's a mother, and she has a beautiful daughter. She is passionate about helping family, like you see here. She's passionate about advocating for families, right? And she's going to be sharing with you the education aspect of how we could prepare for our children. And then we're going to invite in Mafi after that. So stay tuned and please help me welcome Paulina.
So thank you for that introduction. Hi, everybody. And thank you for joining us. I'm really excited to be here with you and to be able to share. Yeah, so right now, what I'm going to start with you guys is talking about the RESP. This is the thing, the word, that's thrown around a lot when it comes to child education. And, for me personally, as a mother, when I left the hospital, I was given, hi everybody. So I'm Paulina. Yeah, I was given a leaflet, a little pamphlet that said, here is an RSP, here is, go and get started. But I had no idea what was going on. I had no idea what the process was, which company to choose, and what was really best for me and my family. So I'm really passionate about making sure that parents know their options and how the RESP really works, because you can't make an educated decision if you don't have the education. So that's what we're going to be providing to you today. And we're going to cover a lot of things. If there's anything that you have questions about, because of the restriction of the time frame that we have, we want to make sure we bring as much value to you as possible. So any questions that you have, just go back to the person who invited you, and they'll direct you to the proper sources and help make sure that all of your questions get answered. I just noticed behind me there's a wall, and I'm sure you can see this is my wall of art for my little girl. She is we're a pretty artsy family, so she has her own display area. And I actually love sitting here because it reminds me of the unlimited possibilities that both my child and so many have. and we have an opportunity to help them along. I know that when I graduated from my post-secondary, I had a lot of debt, and it's a hard thing to lug around with you. So we have an opportunity to help our children so that they don't have to start the way that we did. So let me jump right into the RESP and we'll get started. So what is an RESP? An RESP is a registered education savings plan. So as you can see, it's registered. Registered means that it is registered with the government through the Canada Revenue Agency, or CRA, just like the RRSP and the TFSA. So it is a tax sheltered plan and gives access to government grants. And as much as it says savings plan, it's not just for savings, it's also for growing. So when you use an RESP, what you're really doing is you're investing your savings in order for it to grow and gain interest, so that by the time your child is ready to go to their chosen school, they'll have a much larger amount that they can put forth towards that. And it's also convertible to an RRSP, which we'll talk about in a bit. There are 3 steps to the process. The first one is the contribution phase. In the contribution phase, that's when you, the subscriber, can open an RESP for your child and you contribute money into that. So there are different types of plans that we're going to go over, but the majority of them, you just contribute as much or as little as you want, and up to a maximum of $50,000 per child. The child who's going to be receiving those funds when they're ready to start school, they're called the beneficiary, just so you're aware of the terms, because I know I wasn't, and it was really frustrating for me. So I want to make sure you guys know. And there are no annual limits. So you can contribute up to $50,000 in the first year if you want, but you can't go above that. And I have a little star on that $50,000 because if you do go over $50,000 contribution, you will be charged 1% per month on that amount. So it's not really meant to be a bulk, throwing money in it. It's meant to be specifically for education savings, and there's certain restrictions put in place for the government. So you just got to make sure that you're aware of that. And usually if you're working with a company that offers an RESP, they'll make sure that you're staying within that limit and they'll notify you. The other thing is early savings. Early is always better when it comes to putting money aside, even if you're just putting it aside. Because when you start early, you have the benefit of compound interest, right? So compound interest is all around us. Even right now, I know, especially before I got into financial advising, I would see it in my credit cards. I just didn't know what I was seeing. You like every day, like interest adds on every month. And then if you don't pay, interest adds up on top of that, interest on top of that. That's negative compounding. But positive compounding is when you're actually contributing your savings and you have growth on that investment, that interest, and now that becomes the new amount, and then you get interest on that and it grows, and interest on that and it grows. So it actually has a snowball effect. So the earlier you start, the more you're going to have at the end. It doesn't grow in a linear way. It grows like this. So, if you haven't gotten started yet, I just want to take a moment and say that is okay. There is no right or wrong when it comes to saving. And it's really, it can get really like frustrating and stressful for some people. And there's, a lot of thoughts of, oh, you should be doing this, you should be doing that. So just make sure that right now, if you're a parent out there, just give yourself a pat on the back. We're in a tough time right now. And the important thing is that you're here, you're learning, and you're ready to make changes going forward. And that's really what's important. So just don't beat yourself up for anything thus far. We're only human. So I just want to make sure that I say that, because I know there's a lot of stress around that. The second stage is accumulation. So accumulation is now when the funds that you've contributed, they start growing. So there's actually Like a TFSA and an RRSP, you're not limited to just putting it in a savings account. Actually, you don't want to do that because savings account, let's say like at a bank, which is not a registered account, would grow at like less than 1%. So what you want to do is put it in like a mutual fund or an ETF or a stock or a bond. And there's companies that help you figure out what the best way is to do that, so it's not confusing. So the accumulation is the contribution that you've made, the interest that's growing on that, and the grants that are provided by the government, which we're going to talk about in a moment. And the third stage is benefit. So benefit is finally the time when all of your efforts and the time has passed and your child is ready to go to school and they're ready to pursue the next level of their education. So that's when they withdraw the amount, which includes those government grants and investment returns. And it also has very minimal tax for the students. So we're going to talk about tax now, because we mentioned it's tax shelter. So what does tax shelter mean? Tax shelter means that you are protected, we see the roof, from paying taxes during the early stages, because that means that it's not going to limit your growth. Anytime you pay taxes, it's going to reduce the amount. So what the government is doing is they're trying to help to make sure that you can grow those funds as much as possible as you're contributing and growing. So you're not charged any interest when you contribute. You're actually contributing with after-tax dollars, or on the growth when it's compounding interest. One thing to note that I want to make sure that I mention is a lot of the time, we're even getting into it now, when the new year comes and then it's tax season and everybody's talking about contributing to your RRSPs because you can deduct that to lower how much taxes you're going to pay. But the RESP is not deductible. It's not used for that purpose, just so you know. So if you do contribute to your RESP, that is purely for the gift of education for your child. It's not for deducting for tax purposes. So where does the tax shelter end with the RESP? It is on the withdrawal. So when the child is now ready to use that money for their schooling, that's when it's taxed. But it's not taxed based on the parent or the contributor, grandparent, aunt. It's taxed based on the child. So most children, when they're going into post-secondary, it's usually just after high school, and they're usually not making a lot of income. So the amount of tax that they would pay on the withdrawal is actually going to be very, very little. And that's part of the big benefit, because the government wants to encourage students to pursue post-education so that they can have access to better options when they go and join the workforce. So there are 2 government grants that are available for children. So there are some restrictions, but they're really amazing. The Canada Education Savings Grant is available for any child who is less than 17 years old when the RESP is open. So it matches up to 20% of your contributions, up to $500 per year. And that is an addition onto what you actually contribute into the plan. So for example, if you put in $500 over the year, you would get $100 as a grant. And if you wanted to maximize it, you would contribute $2,500 in the year, and that would get you the $500 per year. And so the exact matching amounts may differ because it goes based on your tax bracket. So if you're higher income, then you don't need as much help from the government. So they'll give you a lower amount, but no matter what, you will still get up to a lifetime maximum of $7,200 as long as you contribute enough to warrant them matching that grant amount. So if you are higher income, you can still get the $7,200 if you start earlier. It'll just take a little bit longer because the amounts per year you're going to get are a little bit lower. But it's a great tool. It's free money, and you're not going to get this anywhere else, like with RSPs or if you get a mutual fund. So this is one of the biggest benefits of, as well as the tax shelter. This is one of the biggest benefits of the RESP. The other option is Canada Learning Bond. And this is really great, especially for low-income families. So, this year has been crazy. I know it has for me. And being at home and with kids and managing everything and working, and a lot of people have lost income this year. And so this is a great opportunity if you're getting started and maybe your income's been hit by the pandemic. Then the Canada Learning Bond, once you open an RESP, even if you don't put anything into it, $0, they will still provide $500 on the first year and then $100 every year following, up to a maximum of $2,000, up to the 15th birthday of the child. So this is for families who I mentioned are lower income. So if the family income is below $45,970, then you become eligible for this learning bond. And it's great. It also gains interest in the account and it's completely free. So who can open an RESP? I have within our team, we've had someone who was wondering what to do for a family member who had just had a child and what kind of gift they could give them. It's the holiday season now, and they thought, why not contribute towards an RESP for their child and actually set them up for a future that they can benefit from long term. And, coming from a financial background, our minds automatically go there, but a lot of people don't. So that's definitely something to think about. There's so many people who can open an RESP. In this case, parents, guardians, grandparents, other relatives, or even friends. And they can do so at like a bank, a credit union, investment dealer, mutual fund companies, and trust companies. So there's actually a lot of options when it comes to RESP and a lot of places to navigate. And it can get a little bit confusing, but that's why it's important to talk to your financial advisor and figure out what really is important to you. What are your limitations of, what you want to, or what you can contribute and what flexibility you want. And then they can help you navigate through that and really find the best thing for you. And all that you need to set it up is a Canadian address and a social insurance number. So for RESPs, one thing I want to mention is a lot of people ask about, okay, can they go anywhere? Can they study anywhere? Can they do anything? RESPs have a list of schools that are approved, I should say, for to qualify for an RESP. And you can actually find that list on the Canada website, canada.ca. They have just a list of a bunch of schools, and they're adding to that every year. So there's a lot of options for students, even some areas overseas. And the programs that they offer through RESP are not just universities and college, there are technical programs as well. So it's really cool. So there are 3 types of RESP plans. The first is family, I'll say individual first. The individual is the most simple plan. So it's for one child. The child does not have to be related to the subscriber or owner of the plan. So that could be the parent, the grandparent, the aunt, uncle, friend. And it's up to $50,000 per child. And it's managed separately. So it's just that child's RESP, and because anyone can open it, they can have multiple RESPs. So if you open one for your child, the grandparents open one for your child, an aunt opens one for your child, that's fine. They can have 3 RESPs as long as the total contribution from all 3 sources does not go over $50,000. And you can even get it for an adult, but you don't qualify for grants. So it's not necessarily the best option for an adult, but it is possible. And there's no minimum deposit for an individual plan. The second one is family. So family is basically, some people feel better when they have multiple children. Instead of getting a separate plan for everybody, they can just get one family plan, which groups all of the beneficiaries or children into one plan. So they each still have that $50,000 of maximum contribution room per each child, but it's lumped together. So if you have 2 children on an individual plan, you're going to have 2 separate plans, 50,000 each maximum. But if you have a family plan with 2 children in it, then you're going to have up to 100,000 available for both children to use. So that one is really useful if you have, if maybe a child decides that they're not going to be going to school or pursuing secondary education, then now the other children can access the rest of the sum that's in there. So that's one of the benefits. The difference also between those is the beneficiary has to be related by blood or adoption. So this has to be either a parent or grandparent, or yeah, those are the main. And the grants stay separate. So whatever grants are received by the children are going to be still only available for the children. If, let's say, one child decides to go and they're not going to be using the RESP, then if the other child still has grant room available, you can transfer whatever amount up to the maximum of 7,200 to the first child, but you can't go over, you can't double dip as much as that'd be nice. But, and there's also no minimum deposit for that. So the last RESP plan, and I hope you're still with me, I know it's a lot of information, is the scholarship or pool plan, the group plan. So just like it sounds, this is a plan for a group of child education plans together. Just like at work, I know I've had it, a lot of people have a group RESP at their work where it's paid into a general pool of people who are saving for their retirement savings, and it's managed by that company. So it's offered by group plan dealers. These are specialized companies that specifically deal with managing an RESP. So they are the administrator and they make all of the investment decisions. So this is catered more towards people who maybe need a bit more rigid structure, and they don't want the flexibility of just being able to make contributions anytime, because this plan has a minimum initial deposit and regular payment commitment afterwards. So, you know, if you're someone who's looking for more discipline in contributing, this is an option for you. It does come with higher fees, and those fees are due to the company who's taking on all the work of making the administration decisions and management for the plan. So one of the questions that is on, I'm sure, everybody's mind, because it was on mine too, and what if the child decides they want to take a different path? They don't want to go the traditional university or college or trade school route. So what are your options? So there's actually quite a few options. First of all, you can wait until they turn 36. For me, I've gone to school again after my initial university, and I know many people who have gone to university later in life. So you never know what life is going to bring. You never know what decisions your child is going to be making and how their life is going to go. That's part of the exciting thing, is we don't know, but it's good for them to have that option. So you can actually just wait and see, maybe they will access it later on in life. Or you can see if you or your partner have RRSP room. So you could actually transfer up to $50,000 to your RRSP from the RESP. Or if, hopefully, you know, if the child, God forbid, has like a disability or something else that maybe it makes pursuing regular education more of a challenge for them and they need a different kind of support, then there is a registered disability savings plan as well. And you can transfer the RESP to the RDSP as well. So there's different options, and all of these options are actually going to be determined when you're sitting down and actually opening up that RESP. So make sure you ask all of these questions so that you know what your options are going to be when that time comes that your child might say, I don't want to go. You can also transfer it to another child or a beneficiary, like in the family plan, or you could donate it. We are all coming from different places, and sometimes we want to support the community. I know right now we've seen a lot of community support coming up with all the COVID activities. So if you want to make a donation, you can do that. And if you direct that donation to an educational institution, then you can also get a receipt, a tax receipt, and you could actually write it off when you're filing your taxes. But let's say you just want to take the money back. The child doesn't want to go, it's clear, and you've decided the best option for you is just to withdraw that money. So the contributions that you make are tax-free. So that means that you do not have to pay any tax when you're taking them out, because you've already paid it before you contributed it. So that comes back to you tax-free. The grants would be returned to the government, because those grants are intended specifically for education purposes for the child. And then the growth depends on a couple of factors. So if your child is over 21 years old, if all children under the plan are over 21 years old, and the plan has been enforced for more than 10 years, and you're a Canadian resident, then you are able to take out the growth, which is the interest that's accrued on the contributions, not on the grants, just on the contributions. And you'll be taxed on that growth based on your tax bracket for that year, based on the income for that year, plus a 20% penalty, 12% in Quebec. So there is a penalty because really it's meant to be for education. So, but it is possible. So those are the options that you have. And overall, it's really an amazing savings tool. So, in this business and in just through my life, I have met so many amazing people, and every single child, every single family, every single person is completely important, diverse, and unique. And we all have different needs. We all have different goals and visions. So it's really important to figure out really what is right for you. And that's where your financial advisor comes in, because there's so many details to financial planning, and there's strategies. And in today's world, the information can be overwhelming. So having someone to guide you really makes the process a lot easier. And right now it is the season of giving. So if you have a child in your life, or a child close to you through a family or friend, and you're thinking of what to do, this is a great option. And the confidence that you'll be able to make a difference in somebody's life long term is really heartwarming. I know for me, I've benefited a lot from knowing this information, and my daughter is going to benefit from it when she is ready to go to school. So I just wanted to thank everybody for taking the time to be with us today and to listen to me. And I hope you gained a lot of value. And again, if you have questions, just go back to the person who invited you. And next, we're going to have another amazing speaker. I will let TG introduce them. And have a wonderful Saturday, and God bless. Take care.
Thank you so much, Paulina. Thank you for sharing. This has been wonderful. And I hope you're getting enough value out of this. We know that we understand 20 minutes, half an hour is not going to do it. But for any questions you may have, you can type it up. Also, you could send us an email and go back to the person that invited you as well to get the answer for your questions. I would like to share a poll. It's going to be a quick one, and we're going to answer them maybe in a minute or so. So let's do this. So there's a couple of questions, and what you think is right, can you please answer them? And we may or may not be able to share the results today, but we would like to engage with you and find out. Great, I see you answering. Wonderful. All right, I'll give you another 5 more seconds. 92. Okay. All right, we end this poll. And the next speaker, who I'm excited to introduce, her name is Marafa Bai. We had the opportunity to work for the last 4 years here in the financial services industry. She's been working for over 4 years now. She's very, very passionate about, empowering women. They're specific about helping women. As far as I know, she also have plans ahead for 2021. She will be educating, specifically empowering women with their finances. So without further ado, I would like to introduce Mafi to the stage. Mafi, can you hear me? Welcome, Mafi.
Thank you, TG. Is it good now?
Yes.
My name is Marafa Bai, just like TG was talking about. I'm also known as Mafi. And today I'm here to talk to you about, child's plan, how we can actually save for our kids, our young ones, right? So I believe in patience, perseverance, and rewards. That's my philosophy, to build not only financial wealth, but a prosperous life. So as a mom of 2 young children, I understand just how it's overwhelming to think about our finances and actually deal with it. But with the best, plan and strategies, you can actually get to your goals and your dreams. So today I'm here because as a woman, I know how it feels to be, left out of the financial industry. And actually, I want to be the one to educate all families and especially women to know about their finances, because I believe that if a woman learns about the financial aspect of life, then she can change her family and then her community in the long run. I would not go without saying the famous African quote, which says that if you educate a woman, you educate a nation. I don't want to talk about the man's side, but that's what it says, right? And it's my mission that women from all walks of life get a better knowledge and understanding of their finances. So today we're going to be talking about child's plan. So I want you to think of this while I'm talking about it. Is it a priority to save for our children, right? I hold this topic so close to my heart because I have young kids as well. And when I think of all the possibilities my kids are going to have, just because mommy made a great decision 20 years back, gives me goosebumps. And of course, sometimes I wish I was a kid. But hey, it's never too late to be in the right direction, right? With the right direction and guidance, you can actually make it happen. Before that, I go into the presentation. I'd like to talk to you about some writing I saw on LinkedIn, and I'm sure some of you that are follow me on Instagram or Facebook probably saw the post a few weeks back, right? So it reads that at 18, you can get $150,000 in student loans, but you can't get $150,000 loan to start a business. And this really kind of got me worried and caught. As a parent, have you ever thought of that, right? What if my kid doesn't want to go to school, or what if my kid wants to do something other than schooling? I know it's never crossed my mind, but recently it has. And it's always a good thing to think about the different directions that our kids are going to take. So today I'll be talking to you about a whole life policy for a child and the amazing ways your child can benefit from it. So when we talk about whole life policy, it's basically a child's plan. And I want you to think about these 3 questions while I go through the presentation. And I want you to think of it on every step of the presentation. The first one is, are your kids going to university or college? That I've already raised in the beginning. And it's like, I'm not sure if they're going to go to university, or I'm not sure if they're going to start their own business, right? Do you have a plan to set up if they decide to start a business? And then the other one is changing the financial well-being of your kid in your hands. These are the questions I want you to think about. So let's look into what is life insurance for a child. Children's life insurance is a form of coverage focused more on granting lifelong financial security to a dependent child, rather than the unwelcome thought of, financial protection in the event of something happening to them. So basically, when we think of children's life insurance, it's kind of, it gives you this bad shivers, because if you're like, for my child, and a life insurance, but it's basically learning to become the beneficiary of your policy while you're still living. Your child gets to be the beneficiary of its own policy. And the other aspect is getting your child a whole life policy can provide a savings and investments vehicle for their education, first home, or travel. So participating whole life policy works like this. It's a permanent life insurance that's going to pay out a guaranteed death benefit against the death of the individual, when we think of it as on the insurance aspect. So what happens is it allows the child to have a permanent life insurance until the life of the kid, right? And also has cash value benefits, where the cash value is used throughout the life of the individual, including into adulthood, and this can generate dividends during this whole period. It allows the kid to use the cash value in different stages of life, at school age, or wanting to go to school at a later age, or when he has his own family and is thinking about buying a home, or at retirement stage, right? Because we have different stages of life. So children's insurance is guaranteed to remain in force for the covered child's entire lifetime. So this means that when your child or grandchild reach the age of adulthood, they'll not need to go through the whole process of obtaining an insurance policy, because we've seen it earlier that it's a lifetime policy. So a whole life insurance accrues a cash value which the policyholder can withdraw from, like a savings account. So the child at a certain age can actually withdraw that money, either using it as a collateral for a loan from a financial institution. And the great example for this is Disney. Walt Disney had a dream of building Disneyland, but he didn't have the money for it. But thankfully, he had a whole life policy that helped achieve his dream. So I'm going to quote what he said. "I could never convince the financiers that Disneyland was feasible because dreams offer too little collateral," right? So yes, he had a dream, and thankfully he had previously built a bank using a whole life insurance that enabled him to fulfill his dream. And this also gets me thinking. I have a young cousin, and he's really good in school and all, but then at one point we started talking about, what's your life vision? What are you planning? And he says, school is not only the only option. There are lots of things that I can do. I can open up my own tech company. I can, start a business, have a startup. And it got me thinking, okay, so what are his parents going to do about this? Are his parents going to, take out money from their retirement savings or equity of their home? Or how are they going to support this child? This provides your child with both aspects, which is lifelong insurance coverage and a head start on their financial savings and monetary goals. So let's look into the benefits of participating whole life for kids. It incorporates life insurance along with a savings plan, no maximum limits to coverage or cash value within the policy. So they can contribute as much as one wants within the policy's limits, right? It also has flexibility in using cash value for any purposes, by going to school, buying a home, traveling, starting a business, all those ideas that come up with kids, it is possible. And funds can be used for any global educational institutions or non-education purposes, right? So these days we have kids talking about, I don't want to go to school in Canada, or I don't want to go to school in the US. I actually want to go to Japan or China or experience. So it allows you to have that global schooling. Cash values can be accessed at any time, and your child can borrow against cash value with no tax implication. right? Here we have to understand that the whole life policy allows us to have tax sheltered growth, tax advantage at withdrawal, and death benefit is tax free as well. Remember, the biggest enemy in building our wealth is tax, right? And you can also transfer the plans once the child turns 18. So by the time the child turns 18, the ownership can actually be transferred towards the child, and then the child can decide what he wants to do with the policy. So can children's insurance policy be an alternative to RESP or even more? So many parents use participating whole life policies to supplement or as an alternative to RESPs. So basically, the choice is parents or grandparents that actually want to put this whole life as an RESP or as an alternative. While RESPs are an excellent tax advantage way to get a head start on saving for a child education cost, supplementing an additional plan helps with the rising expense of post-secondary education. Basically, we know that these days post-secondary education is getting higher, and imagine 10 years from now, 20 years from now, is it going to be the same? It's going to go higher, right? So why not add up more money to saved up so that the kid can comfortably go to school? So at what age can a child save in a participating whole life policy? The first thing is, what is the goal for opening up a whole life policy? There are a couple of things you want to achieve, right? Is it for education or starting a business? Is it for buying a home? Is it for retirement planning? But the best part is, from 15 days to life, you can set up a plan for a child. For example, a 15-year-old baby is locked in at age 0 for life, which is amazing. As inflation goes up, insurance rates goes up as well. So you can lock it up. You're basically starting the financial future of your child at age 0. It's not even 1, but at age 0, this child already started their financial future. So who can open a child's whole life policy? It could be legal guardians, parents, or grandparents can actually open a whole life policy and become the owner and transfer it like we were looking into earlier at age 18. Benefits of a whole life policy in a nutshell. What does it do? It's a new beginning and it starts now. If you save today, imagine the difference it would make. See, as parents, we have the ability to give our children the possibilities with just a simple act of making the right financial decision that can separate them from us. And our children will start at a different level from what we started. As my father always says, one generation has to be different than the other. And then your child can open his or own business without having to ask for a loan. Buying a new home is achievable at a young age. How many of us have ever seen a young child, 18, 19, 20, or even 25, buying their own home? Just like that, easily, right? So it's achievable. And the other thing is, education is covered wherever your child decides to go. No restriction on how the fund is to be used. So I want you to understand that I am not saying replacing RESP, but there are certain restrictions capped at $50,000 when it's RESP, right? What if your child decides to medical school and it's going to cost around $200,000 for school, while the RESP won't cut it? You need to save to have alternative. So we're saying, hey, if you can get both RESP and also this plan, why not think about getting a holistic plan? One of the things that I love when putting a policy for a child is the ability as parents to give the good stewardship of money. This is about values and how they can access their money for certain things in their life and in their future. And we're doing it around guidance and responsibility. It's not just here, son, or here, daughter, go. I have a big policy for you with lots of money and do whatever you want, but it's about them learning about being responsible, right, with it and using it for the right reasons. So I have critical questions for you. How would you like to plan your kids' future? Do you see your children buying their first home or starting their business? And as you can see, there are a lot of benefits in planning for your kids' future now. We believe it's one more step to help you create financial control for life. I hope this session was informative. I know Paulina did an amazing session with you. And today, I want you to answer all the questions that I have raised while we're going through the presentation and at the end of the presentation as well. And I think TG will end this. And one more thing I want to add is I hope everybody has a happy holidays. I know we had a very, 2020 was not that good of a year, but in life, there are up and downs, and this is the actual wave that took the whole world down. But I think we're going to get stronger and better because, once you go down, you have to go up, right? So thank you, everyone, for being part of our presentation today, and hope to see you very soon, and maybe the near future, 2021. Thank you, and TG, take it away.
Thank you so much, Mafi. That was wonderful, and thank you for the reminder too. The target for today was to make sure that we complete our session on time. We have about 7-8 minutes. We'd like to use this for a Q&A session. But before the Q&A, I have another poll, 2 more questions that I wanted to pull it out and have you answer that. So let's go ahead and do the second one. See how we do. So Paulina covered the education aspect of the session, which is RESP, where a lot of people know what RESP is because it's been, when you go to the bank, they talk to you about it. When you gave birth, you get to hear about it right from the hospital. But the child plan, we don't hear a lot about, but we don't want you to not know about it. That's why we're talking and bringing this topic to you to make sure that you have a choice, you have an option. Information is powerful, and we want to provide you with the right information so that you get to choose what is the right thing for you. Education is great, but formal education might not be the right choice for you or for your belief or for your family or for your children. For that reason, you have a backup, you have an alternative, or perhaps you could do both. That will be, the choice will be up to you. But if this information is not implemented, it doesn't mean much. So how could you take this information and implement it in your life, right? Okay, so let's run the poll, and I hear that Mabrat would like to ask. So, okay, we'll give you an opportunity to ask. So here is the poll. So you can answer those questions. Can a child or children insurance policy be alternative to RESPs? The questions, and this poll is anonymous. We don't know who's answering it. All right, Mabrat, if you would like to ask the question, you could speak by unmuting your mic, or alternatively, you can also type up the question on the chat window. All right, so since we have a couple of minutes, I would like to pick up on the poll. So the first question, majority of you answered yes, and the answer is yes. You can use it as alternative, or you can use it as an additional. And the next one, I see a lot of people say yes, and the answer is yes. You can open a child participating whole life plan as early as 14 days old. We actually have 2 exciting news last night. 2 of our associates just gave birth. One is a boy and one is a girl. So we're excited about that. And to just make sure that I let you know, there are maybe some of you have children, some of you have niece, nephews, or you have a friend's kid that you like to provide a gift for this holiday season. And one of those options for you is, why not help the parents start something for the child's future? Yes, toys are nice, gifts are great. We all love gifts. But if you give them a gift of a lifetime, I think this will be more valuable for your child, or any friends and families, children that you care most about. That's why we have this session specifically during this giving time, and you could make a use of that as well. You don't have to really be a parent to think of these gifts. All right, so results for the previous one. The previous poll, let's do this one, the RESP poll. So I see 60% think this is the average cost of education, is the average cost of tuition only. It's not even, accommodation. It's not even buying the books. This is on average, it's over $6,000. That's how much it costs per semester on average. And we're not even talking about those, becoming a lawyer or becoming a doctor. Can RESP be gifted? Absolutely yes. And majority of you said yes, and that is wonderful. Now, the next, we have also a survey that we would like to send out to you. You probably will see it right after this meeting, either an email or at the end of the slide. Please respond to us so that we can do better for the next one. We will have more sessions like this, maybe talk about how to plan for retirement, maybe how can you purchase your first home. So we have different kinds of sessions that we would like to empower you with and give you knowledge and information. But that's not only it. We can actually help you implement it. That's why after the session, if you like what you're hearing, what you're listening here, reach out to the person who invited you and ask those questions. And we will definitely be answering those questions to you so that you have all the answers given provided on timely manner. We appreciate you. And thank you again for spending your amazing Saturday morning with us. We wish you a happy holidays, and may the next year be your best year. And I'm sure for some of us, 2020 has been a wonderful year as well. With all its challenges, it came also with an opportunity. So we're grateful for that. Again, thank you, thank you, thank you. And we'll see you on the next one. Take care, everybody.
I am the change. I'm the change I've been waiting for. Listen, I've cried and I've walked. Now it's time to run, to soar. Yeah. Listen, I've cried and I've walked. Now it's time to run, to soar. Yeah. And I'm not asking for permission. I'm kicking down the door. I'm the change I've been waiting for.